Welcome to the Optimized Law Firm podcast. My name is Patrick Carver, and thank you for joining us. This is the podcast where we talk about how to run a more profitable and enjoyable law firm. And today I'm pleased to be joined with David McMillian. He's the tax credit king of Georgia. I'm giving you that name officially. Take it or leave it. But we are going to be talking about tax credits specifically, and they are an amazing way to be able to generate more profit for your business and ultimately pay less to the government in a legal way, of course. And the sad fact is that most companies don't utilize them or really understand what they are. And so we're going to talk with David today, who is an absolute expert on tax credits. He's built a firm all around that purpose, McMillian and Associates. And so really pleased to have him. Would love to welcome you to the podcast and love to hear a little bit more about how you got into this space and your background with the tax credits.
Yeah, awesome. Thanks, Patrick. Yeah, glad to be talking about this. I think it's a great tool that really isn't well known or talked about, especially for just the average business owner. So I love that you have this podcast kind of helping business owners run a better business, which I think is awesome. Really, this is something I've been, spent most of my professional career working with companies to capture these tax credits. And actually, this year is our 25th anniversary as a business. So we've been around for a while. And really, we just have this simple goal that we want to try to help businesses create new opportunities by finding money through these tax credits. And we try to make sure that people are looking at all tax credits, especially since COVID. I know you've experienced this. You hear this stuff all over the place, and people wonder, is this too good to be true? What's the catch? But there's a lot more out there for businesses besides some of these things you might hear on a radio or on a commercial. And so that's really what our goal is. We want to try to help people figure out what's available, but also I think equally important to us is making sure people get these tax credits, is making sure that the process is simple, easy, repeatable versus, I have a copy in my drawer right here of the tax planner that my CPA gives me every year. And it's all digital now, but nobody wants to fill out a big giant packet of information. So that's something that's, influenced how we try to help people, is making sure companies know, like, hey, how do you get a process in place to capture these things?
Actually do it. Yeah. And I'll just give it 2 minutes kind of with my experience with tax credits and why this is such an interesting and I think valuable topic. For the past 2-3 years, we've utilized tax credits at some level. And, looking back, we've saved probably at a minimum 20 to 30,000 a year on tax credits and just different and other tax strategies as well. And one of the big challenges with this is that I think there's a couple challenges. It's complex. You have to have specialized knowledge for it, and ultimately you are relying on government resources or public resources that are out in the public space to inform you on, do you qualify, do you not qualify? And so myself as a business owner, I probably have spent way too much time on this than, what I should, because I just have the mentality of like, okay, there's gold in the mountain here. I need to figure this out. So I've read like tax code and, and all of this stuff, and, but it's not a good use of my time. Right. And so a friend shared your info with me, and so kind of instantly, gravitated to what you guys do, because you're totally focused on tax credits. You have a system for it, a tech system that, it all resonates well with me. And I think as well, I'm just, I think if you're a business owner, you absolutely will value, especially from your guidance, especially for the fact you guys do it all on contingency basis as well, which is awesome.
Yeah. Most people don't, what I tell companies is that you've probably heard about tax credits, maybe in an indirect way. If you're in a state where there's a big manufacturer moving in, or you've had a big movie that's been filmed in your state, you've probably heard about these things indirectly. But the reality is, unless you're going to spend hundreds of millions of dollars, the government is not telling you how to get this. There might be information, but they're not walking you through the process of what to do and how to document and how to answer all these nuances. And then the reality, unfortunately, is that most CPAs, they're not experts in it. and they have a ton of other things on their plate that they're working through. And so this just
Sure.
becomes, item number 37 down their checklist, that if it's staring them in the face, they may get to it, but oftentimes it just kind of goes unnoticed. And like you, unless you have a friend or a peer tell you about one of these things, the chances are you're probably not taking advantage of everything you should.
So talk a little bit about what the difference is between a tax credit and a tax deduction, because I think from my personal experience talking with law firms, they seem to get the idea of deductions, but I don't think most really understand, maybe even conceptually, the idea of a credit versus a deduction.
Yeah, absolutely. So how I explain this to people is that a deduction lowers the amount of money that you're taxed on, which is still good. Right. A credit actually reduces the money that you're paying to the government. So it is what I tell people, it's a dollar for dollar reduction in your tax liability. And so whatever money that you're about to write to the government, when you get a credit, that's money that you actually keep in your bank account and in your pocket as true profit for the business. So it's not just a credit. It's not just, a deduction is lowering how much money you get taxed on, and then you still owe some taxes at the end. A credit actually reduces the taxes that you have to pay to the government.
Yeah, and I would even say in like caveman terms, you typically get a tax bill at the end of the year, right? And your CPA will tell you, oh, you owe 40,000 or 20,000. This just means you get to cut that, right? And take absolutely. Depending on how you utilize this, you can get a lot out of that. And for me, it's such a no-brainer because it's ultimately pure profit when you strategize, take the time to do it, and and really go through with it.
Yeah, absolutely.
Can you share some examples of how tax credits have had a positive impact on some of the businesses that you work with? I know you work with a wide variety, but you do work with law firms, and so
absolutely.
Kind of like what the how much money are we talking about, and what does that mean in terms of just benefits to the business?
Yeah, absolutely. That's a great question, Patrick. There's a lot of examples. The things that come to my mind, we work with a lot of different industries, and they all affect people a little differently. So I remember a couple of years ago, there was a manufacturer in Atlanta that we were working with, and they were a small kind of woodworking manufacturer, and they got a tax credit for buying equipment. It was something specific for manufacturers. And I still have this kind of burned in my memory, is that the business owner said to me, is like, this money that we're getting from spending all this money on equipment is letting us compete with overseas manufacturers to try to keep work here in the US. And I was like, wow, that's pretty awesome. I had another client, they were a restaurant chain in Athens. And we found them a lot of money, and they're like, hey, this is allowing us to give back to our employees and give them bonuses and extra money that they wouldn't have been able to provide. And I think for the average business owner, we don't have size limits. And so sometimes for us, and we're a small business too, we have less than 25 employees, finding $5, $10, $15, $20,000 is as important as finding hundreds of thousands of dollars. I get tax credits myself, and there's a lot of small businesses we work with, is that this money allows us to keep investing in the business. That's the way I look at it, is that, I'm always going to have that mindset of trying to run a better business and invest in my people and the process to try to make it better for our clients. And this money kind of lets you do that faster. It's like, when you've got extra profit, it's going to benefit and trickle down, whether it's giving back to organizations you support, or to your team members, or being able to invest in new things that you may not have been able to do so in the past, or to be able to invest in more of that. I see it affecting companies in a number of different ways.
It's awesome. Yeah, it's especially when you're early on in the life cycle of your business, or you're getting to a certain plateau where you think now you're going to make some good money this year, or your first time to you've been paying people, and now you actually might get some profit, and then you get hit with this big tax bill. It's just very deflating. And so I think this for me, it was very beneficial to, have these resources, because we get to invest in, and I think it just gives me more peace of mind that like we have money in the bank and can do some of these things, with our folks. So let's get into kind of the meat of it, which for me is, how we can make this applicable to law firms. And, I've listed I sent some info over. I listed a handful of items that, that I've utilized, such as like I didn't include this one, but the employee retention credit. You told me about a technology credit. I've used opportunity zone. I've used R&D credits. But then there's also stuff like military hires, childcare credits, things like that. So I'll preface this all, I guess, with there's kind of two different layers of tax credits. You have federal and then you have state. And sometimes a federal will have value at the state or the federal level, and then will also can be utilized at the state level, but a state level credit, something very specific, like we're in Georgia. So a Georgia credit's not going to work in California. What in your mind comes to mind when we're talking about what credits law firms might be eligible for?
Yeah, absolutely. How I start these conversations with business owners is that business activities create tax credit opportunities. So the way I want to encourage people to think about tax credits is starting with, what are we doing as a company, whether it's hiring, training, creating new jobs, making investments. Those are the things that trigger these tax credits. And I think the way you broke that down, Patrick, is great. Is there are some federal credits that are applicable to any business, any state, doesn't matter. Things like the work opportunity tax credit. This is a federal program that the government says, hey, we're trying to get people back in the workforce, earning a salary and income. And so we're going to incentivize businesses to not just hire them, but to employ them. And so this credit applies to hiring people who might be unemployed veterans. So hiring veterans and getting them back into the workforce, hiring people that may have been on some type of government assistance program, even something like unemployment benefits. And, especially as the economy changes, you never know what people's situations are. And so that's one opportunity that companies can look at. And it's available for every new hire that people bring in board, whether it's, replacing somebody or creating a new job. And what I tell people is you can get up to $2,400 per employee. You might be able to get more, but those are, few and far between. But a couple $1,000s for hiring and employing somebody is another tax credit. We've talked about the research and development tax credit, that for companies who are creating or developing new technology products, sometimes process improvement, if it's very scientific in nature, could be something that's eligible for the tax credit. So if you're developing, certain technology, a lot of times software developers or manufacturers are people that are entitled to this tax credit because what they're doing is very technical and scientific. And many states have a piggyback tax credit. That's the word that we like to use. Is there's a federal benefit, but then there's also a state benefit. Alabama, Georgia, a number of states around the country have this kind of piggyback tax credit for doing research and development in their particular state, which is another good one.
Yeah, and if I may just interject for 2 seconds on the research and development side, I think, a lot of attorneys are probably going to hear that or think about it and say, well, we're not in the software development business, right? So not going to apply to us, but we're a little more obviously technically inclined than say most law firms, but we're not a software company, yet we do produce software related development. And the R&D credit, I believe, was originally built for like pharmaceutical and kind of medical research and things like that, but they've extended it, to a pretty large use for technology. And the way I kind of see things shifting for law firms is that, there are tech savvy lawyers and even if they're not, if you're doing anything such as using ChatGPT to, build a little app or something that can do, even not an enormous amount of functionality, but maybe it reads through docs and can highlight inconsistencies or, some kind of small thing. We do this quite often where, we're building a script, which is basically like the kind of the power being function of an app. It's not like something you would necessarily download in an app store, but some sort of script that allows us to do a repeatable process and no longer have an employee do it. And I think legal, there's a lot of opportunities for that with document preparation, document review, intake. I mean, there's a bunch of different applications that folks can get into. And so even if, you don't think you're tech savvy, it's something to look into, because I think, as time goes on, people will rely on technology more and more. And if it can provide a value and save you a bunch of manual labor time, it's really like a win-win, because then you're getting a credit on with it, and goes again. So you solve a business need and also get money back.
Yeah, absolutely. A lot of companies are kind of bundling these technology enhancements, widgets, you mentioned scripts, to add on to the service they provide. And I would say many of our clients, I bet half of our clients we do this credit for, are not what you would think of as companies who get R&D. It's people like service businesses. We're a service business, but
right.
we spend a lot of time developing software.
Yourself.
Yeah,
so,
that's right.
To help your business process, right?
That's right. And it's become easier or more accessible. And not to say that software development isn't cheap. You and I both know it's not, but It's more accessible to say, hey, I've got this idea. Can I do X, Y, and Z and read through a database and push out or produce some content or some result? And you can go online and find somebody to do that fairly quickly. And so a lot of service businesses are taking advantage of that accessibility that's available to implement something, or a marketing tool, or document management, or a script to pull data and organize data in a certain way. And so that could absolutely be something that's eligible for tech savvy firms, law firms, or other professional service companies.
Right. And you also mentioned the technology credit as well, as something that could be valuable, because as we just stated, law firms are moving more towards technology. They're using intake systems. They're doing automations, to send out communications and do the onboarding process for new clients. And is that a Georgia credit or a federal level? Okay.
It's just a Georgia program, but in Georgia, you can get up to $1,250 per employee for all of the time and energy and cost for employees learning technology systems. Whether it's it's not an iPad, but it's a tablet, learning tablets in the courtroom. You've got things like TrialPad, apps that people are using in the courtroom to management systems, legal management systems like Clio,
right?
Or there's a number of these tools to run your business. And I would say, and this too, is not just that we run on technology, but it's the number of systems that almost like cut and dice specific functions of your business are all being automated. And there's a tool, client portals, technology tools, onboarding, marketing, almost every part of a law firm is getting digitized in some aspect. And so if you're a law firm in Georgia and you're learning how to use these technology systems, you get a credit for doing so.
Yeah. And I think, most would qualify because they've got, they're training assistants, they're training other lawyers, they're training themselves to learn how to utilize Google Sheets or just, different technology products that,
right.
Again, it's I think, an average attorney might hear that and say, well, I'm not doing any crazy technology, new technology, or Chat GPT, but just literally like Google Sheets and stuff like that, is technology. So it's I think it offers a pretty broad use case.
Yeah, and technology changes whether there's formal training or not. Most of us are having to stay up to date with all the new features and functions that come out with having a cloud-based software tool.
Right. How about the employee retention tax credit? Can you just share a little bit about what exactly that is? I think there's some misunderstanding about what it is, and also, kind of who qualifies and, things like that with it, because I think there's people out there who are absolutely qualify. And in the legal space, I think there's potentially a lot of people who qualify, but
yeah, this is a hot topic in my space.
yeah,
Not only because you hear about it, there's a lot more commercials and ads, but also because the
radio all
IRS
the
is
time now.
published all the time, but also because the IRS is specifically warning people about this tax credit, or the companies who just market this particular program. And I kind of fall in the middle. I'm not somebody who is just a naysayer, and I'm also somebody who's like, not that everybody qualifies, just give us your information, you get a credit. But basically the government there's three basic ways a company can qualify. First, the easiest, the most clear-cut way is that if you've had a significant drop in revenue in 2020 and 2021, you compared to 2019 or the year before, you can get a tax credit for the wages that you pay employees. That's the clear-cut way. If you're interested, I'm sure, talk to Patrick and we'll figure out a way to connect. There's some specifics around, how much your revenue has to drop and how we analyze that to meet the government requirements, but we can do that offline. But if you've had a drop in revenue, that's a good indication of like, okay, I should look into this tax credit. My revenue went down. Let me take a look at this. Right. Second way, and this is the part that is the hot topic. And because we've been doing this a long time, our company has lived through several, what I'll call, economic or physical disaster recovery type of credits. So we've got some perspective around how the government looks at these things, not just right now, but in 5 years down the road. Right. And that's if what the IRS says is if you've had a full or partial suspension in operations due to a government mandate, or a supplier, a key supplier for your business, had a suspension in operations because of a government mandate, and that prevented you from doing your job, that could trigger eligibility for this tax credit. But the key word is like government mandate. So we have to be able to find like in governor's orders where it says that, hey, you could not do this, or the government is limiting capacity or restricting your ability to maybe try cases because the courtrooms were closed, right, is an example. We help companies do all that documentation and paperwork to prove the government mandate suspension. Right. But a lot of areas, and it's not just on a federal level, it could be on a state level or on a local level. We're here in Atlanta, but there are parts of Metro Atlanta that had different restrictions than other parts of Metro Atlanta. Even parts of the state had different restrictions. City of Augusta had different restrictions than the county around it. And so, what I would say is like, hey, it's a use case situation. And then the other thing is, if you were crazy enough to start a law firm during COVID, after like February 15th, you're eligible for the third category, which is like a startup credit. And we've had several clients who actually started their business after February the 15th, 2020, and were eligible for a tax credit. So there's a few different ways, and the benefit is very substantial, which is why you hear these commercials, because it's a big opportunity. Right. It can be up to $5,000 per employee per year in 2020. But then in 2021, it's up to $7,000 per employee per quarter, which is the kicker. It's not just it's more, but those are the three ways. And like I said, there are two very clear-cut ways that you can be eligible. And then the other way with the government mandates is something that is worth looking into. And maybe, we tend to be more conservative when it comes to like recommendations versus mandates. Right. But we do all that paperwork and we'll do all that digging to say, okay, what mandates were in place from the government that caused you, and how did that affect your business? And let's look at how that affected, and look at the numbers of how that had an impact. And that's something that is another opportunity for law firms.
Yeah, and they can also get it as well if they took PPP assistance as well, correct?
That's right. It does not preclude you. Now, you can't double dip and say, I'm going to use all my PPP money that I paid employees and also get a credit on those wages. But just because you got PPP does not mean you can't also get any other tax credit.
Yeah. Yeah. Okay. That makes sense. And any other come to mind? I know I added like childcare, some different stuff. And I
Yeah,
think,
you know,
it really is best, I think, to obviously have like a broader discussion with
yeah.
someone like yourself to
Mhm.
really go through that. But I think one of the points that I want to stress just with this is that, and I'll talk about it maybe a bit more later, it's just that don't rely on your family accountant to go and do this type of analysis for you and research. And so I find it interesting. And so I'm out looking at different things. But, I think having a conversation with somebody like you, who I really like your approach of, hey, well, let's hear what's, like what's going on in your business, right? And what do you
Yeah.
do so that then I can, connect the dots for you. Because I mean, even after reading a document that's produced in our case by the state of Georgia, reading through all the tax credit, I've read through it and I still have no idea if I qualify for like half of them. You know what I mean? And
Yeah.
so I like you shared one with me that I didn't even know I was, eligible for. And so I just, I guess point there is just it pays to work with somebody like you who has a
Yeah.
very specific skill set and knowledge base, and and really is the the expert in the room with it.
Yeah, and you just never know what's out there. We've talked about the opportunity zones before. Many states have targeted areas for economic development, both on a state and a federal level. That if you locate your business in that area, or you have
Yep.
employees that live or work there, you can get a tax credit, and that's not restricted to industry. And so, it's really something that I think it's helpful to have an expert do some kind of analysis for your business, even if the answer is, well, there's not anything right now that you can take advantage of, to at least check the boxes off that, hey, we're looking into this. Because
Yeah.
if you are eligible, it's a significant return for your business. I don't know what
Right.
the right maybe there's a better analogy. You can put this in a law firm example, but I do a lot of work with restaurants around the country, and especially restaurants that sell chicken. And I tell these owner operators, I was like, how many chicken sandwiches? I asked them this. How many chicken sandwiches would you have to sell to make $10,000 worth of profit? Not money,
Right.
but bottom line profit.
Yep.
And maybe that's, hey, how many cases do you have to try, or how many hours do you have to bill to make not $10,000, but $10,000 of profit? So
Right.
it's worth asking some questions, having somebody look at this, just because the benefit is worth it.
Totally pure profit. And I think opportunity zones are particularly interesting for me because it's one that all you it's I think it's a simple idea to wrap your head around, that there are locations in your state, and I'm in Atlanta, and you have sections of Atlanta that have been marked as opportunity zones if
Mhm.
you with the purpose of driving economic activity in those areas, right? And so
Yeah.
if you are thinking about potentially moving offices or setting up your office for the first time, I think most people are just going to, oh, I like this area, I'm going to put it in there, but they don't, with just a little bit of analysis, you could, plug yourself into $3,500 a year per
Yeah.
employee for, just simply, moving a block over or something like that.
Yep.
So just really, really powerful
Mhm.
when it comes to that. And any others that come to mind as well for law firms that they maybe should check out?
I think those are the best ones to look at first, and then I think as an expert looks at their business, typically you may uncover things that either are available now, or something to put as a checkpoint down the road.
Yeah, that makes sense. So in terms of looking for those credits, just kind of, I guess, like also just educating yourself on
Yeah.
what's out there. What are there any resources you recommend? Obviously, I'm going to tell everybody to
Yeah.
have a consultation with you, because not only you're not going to charge them a bunch of money just to have the conversation, but
Mhm.
you guys work on contingency, so it's
Yeah.
really a zero risk
Yeah.
maneuver on their part. But any
Yeah. I
others
would
come to
say
mind?
Yeah, I'd say three places. Like the IRS, although it's wordy, is a good place to see, okay, what does the government actually say about this?
Right.
And then on a state level, I would say the two places that companies can go look, whatever your state economic development association, or some states call it like workforce agency, and then your state's department of revenue if you're in a state that has, income tax. And in Florida you don't have to pay income tax, but look at your
Right.
economic development agency or workforce agency websites, and they'll usually have some information about what credits are out there. It may not tell you if you're eligible, but those are, I would
Right.
say, the three places to start is, your economic development group, your workforce agency group, and then the IRS website are the three places to kind of start to figure out, okay, what's out there and what does the government actually say about these things?
Yeah, and I think you can also, I would just add as well, YouTube podcasts, just Googling tax credits in
Yeah.
state, sort of thing. And, obviously you have to take, assess the quality of the YouTuber before,
Yeah.
jumping in and everything. I mean, obviously, it pays to have someone who has significant expertise actually doing this. But, for me, it's just, interesting to hear
Yeah.
what people are doing and their different applications, because, we've worked specifically with folks who, provide accounting services for marketing agencies. Well, they've got their set of ideas and, and tools, but then you hear, oh, wow, this is how what real estate folks are doing, or something. And it kind of starts to spark ideas. And you kind of covered this, but another place that I've found helpful too is like the local investment group. So I guess it's like kind of an extension of an economic development zone organization within like the state government. But if you're in a city, I mean, really, especially even a smaller city, I would say, you can probably get pretty good access by just, calling up and, and kind of saying, look, I'm a, small business owner in wherever, Marietta, and just curious what programs are available, and ways that you guys support businesses. And it may not be a tax credit necessarily, but might find resources. There's often training grants, there's often different, things that can go. But it's one of those things that you just don't know what's out there until you start asking the questions.
Yeah. Ask your local chamber of commerce is a great place.
Yeah.
I know. Don't ask Chat GPT yet. It's not ready, but I've asked it. But ask your local chamber of commerce is a great place, because they likely have companies that have taken advantage of these credits that they know about and can provide some resources for your local area.
Gotcha. And I'll share a little bit about how I'm planning for this year, and maybe you can kind of tell me what's a good next step for law firms, and to how to implement some of this stuff. And I think some of it's pretty straightforward, but I'll go on the record. I made a large mistake last year of not spending enough time filling out some of the tax credits and just strategies that could be done. And by the time I got to them, it was too late. I was too busy head down with other stuff, and so I missed out on opportunities. And to combat that, what I've done is just create a really basic Google document called 2023 tax strategies and information. And I'm just chronicling, kind of everything that I learn about, the things that I've maybe done in previous years that I want to do, with a goal of, trying to have most of this done and kind of operational by maybe the sixth month of the year. And, do you have like a timeline or just other, kind of insight as to the best way to utilize this? Because I'm guessing like, the worst time in the world is what we just passed, where you're building up to tax day, because that, is extremely challenging for CPAs.
It's a great question. And I love talking about this one, because I actually literally this morning recorded a video on this topic of when's the best time to work on your tax credits. And it's either right after you pay your tax bill or right after you did a tax credit project. So right now is a great time. And what I would say it's much better now while things are fresh on your mind than waiting till the end of the year where you've got, maybe you've got cases you're trying to squeeze in, clients you're trying
Totally.
to squeeze in. You've got a number of other year-end items, W-2s, 1099s. Like, this is probably not one of the things that needs to be at the top of your list at year end. So you need to be intentional
Right.
and plan now. And what I would tell people, kind of the three things to work on, would be: one, like, spend time figuring out what tax credits you should be pursuing. So however you do that, you Googling it, getting an expert, talking to a peer, figure out what credits are out there that you need to pursue. Second is outlining, what do you need to track? As you know from experience, there's typically some details or business activity things you need to track or
Right.
implement as they're happening, or in relatively short time after they're happening. So you've got a system and process in place. And then third thing is, like, who's going to do that? Who's going to help you? Is there somebody on your team? Is there a third party that can help you? That's like
Right.
step number one. And then I think as you get that going, then you can look at, like, how do we optimize this? Are there systems and habits you can implement inside your company to track these things, or make it part of a regular conversation amongst your leadership team about, oh, what are we doing this quarter? Okay, are there tax credits for doing this? I think
Yeah.
there's a phase one of just what's out there, what do I need to track, who's going to help me do that? And then
Right.
the kind of intermediate advanced levels, like, how do we optimize that? Are there systems or tools or tech to help us do this more efficiently? That's what I would recommend for people to start.
Yeah. And I think I'll also just mention, to hammer home the point, people, may kind of snooze at when they see tax. I'm talking about taxes again or something, but, just imagine, the point you made, I think, was very important, that, how many chicken sandwiches would you have to sell to make this amount of profit? And it's going to vary wildly, but, like I mentioned, we've benefited from 20 to 30,000 a year in in tax credits. And I mean, that, I'd have to make a lot of money. I mean, probably 5x of that, to really get profit, from it. And so it's, just imagine the amount of work and effort it would go into to add an extra $100,000 in your business from revenue, all the stuff that has to happen from that. And you can, I would say, spend under 10 hours, 20 hours in a year, and take advantage of this,
Easy.
especially when you have good providers, who you can work with and lean on to do a lot of the heavy lifting.
Yeah, there's a client who, he runs a small business, 10, 15 employees, and he says the most profitable hour of his entire year is the hour he spends documenting the training that's happening in his organization for tax credits, by
Oh,
far.
100%. That's awesome. Yeah,
Yep.
we'll finish on that. That's a really great quote. But yeah, encourage everybody to get into this world, find out some of the rules and regulations. And just to clarify, you work with folks all over the country, so it's not
That's
just
right.
even though we're both in Georgia, it's not just
Yep.
a peach state affair. You will
That's
help
right.
them navigate the credit world, no matter where
Wherever
they
they
are in
are.
the United States. Okay.
That's right.
Awesome. Well, really appreciate your time. I think this is extremely useful for myself and for really any business owner. So, if you want to get in touch with your firm, what's the best way to do that? What's your website and all
Sure.
that?
It's mcataxcredits.com. We've got free consultations. If you're just interested in having a conversation, you can go there, book some time with me. I'm happy to help. But I hope this is informative for, your listeners and consumers of this, because it's a great tool that most people don't know about or take advantage of fully. And so hopefully that's helpful.
Awesome. Well, really appreciate your time, and we'll have to do it again soon when some new updates come out
Yeah.
in
Sounds
the
good.
code, and find some new opportunities for law firms.